This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this StockBox interview. Well, hello and welcome back to Research Talks here from StockBox with Alan Green and, of course, Dan Flynn. So, chaps, how are we doing? I mean, the weather's certainly changed this week, hasn't it? We're definitely looking into the spring, certainly in the Netherlands. There's lots of, I don't know what they are, but tiny little flowers. I want to call them pansies or something, but I don't think they are. But they're all sprouting up. So, spring is on the way. How are we all feeling?
Similar frame of mind, actually, Mark. I don't know about you, Dan, but yeah, it's lovely and sunny here. I took the dog out for a walk this morning, and a definite sense of spring in the air. And yeah, despite everything that's happening in the world, you walk on a day like today, and you actually feel that yeah, it's the year in prospect is going to be good.
Indeed.
Yeah, definitely. Yeah, it's funny, isn't it? The weather's changed, but the news, it's a very ominous week with the Zelensky and Trump stuff, the tariffs, raising the post-election gains in the S&P, and in Europe, all the Germany set the path for a massive increase in defense spending. So it's all a bit nerve-wracking.
It's interesting, isn't it? I mean, I read a very good article by John Simpson from the BBC just this week, and it was very good. And he was making the point that this is probably going to be the biggest geopolitical shift we've seen since World War II, the end of World War II, effectively, when Europe was formed and NATO and all that. A real colossal shift in geopolitics. So. Yeah, well, we'll see, won't we? I mean, Europe it's funny, isn't it, though, that it takes, a new president of the United States to basically play hardball, and then Europe finally decides it's going to perhaps wake up and maybe stand on its own 2 feet. I mean, in a sense, it's good for me. I live in the Netherlands, so the euro is nice and cheap, and I still make my pounds. So in that, you have to take your wins, don't you, with your losers. But yeah, of course, we have seen a few volatile things, particularly, of course, Bitcoin. I know we're going to talk about Vinanz today with, of course, that pulling back to sort of the 75s, and then Trump announcing a strategic reserve, wasn't it, a sovereign wealth fund, which will include Bitcoin and Ethereum. If you can get that through Congress, which is obviously the hurdle, then he'll do it. And that's going to obviously be bullish for crypto.
Yeah, it's interesting. Yeah, I thought it was going to rally a bit further, to be honest with you, on that news, because it seemed to be the thing that everyone was waiting for with Trump. Perhaps, when we actually see how it's going to work and everything, Bitcoin might enjoy a bit more buying.
Yeah, I thought it might spike a bit more as well. You're right, Dan. Yeah, it's still kind of below the 100 level there. But then again, maybe, we've had quite a bit of a run. We were talking about gold quite a lot, and that obviously pulled back this last week, now at 2900. So, yeah, maybe just a bit of a healthy pullback in things like gold and Bitcoin for the moment. But I generally remain pretty bullish on both of those, really. I think particularly, isn't Trump going to look at Fort Knox? I heard that. Is he going to take a look at what's left? I heard that, and Elon Musk saying, "Surely not." So I don't know. They might open the doors, and it won't be like the scene from Goldfinger. It will be bare, or maybe it won't be. Who knows? I mean, apparently it's not been audited for years. So if he goes and takes a look, it'd be fun.
Him and Elon, I think, are due a trip there to see if it's safe based on this story I've got in front of me, which is just a bit comical, really, isn't it? Picture of that,
but it's given the shift, I think when there's uncertainty and conflicting signals, markets will always pull back, and I think it's a healthy correction, but it does create an opportunity, and I'm seeing we all get emails through with various investment opportunities, and something came through yesterday. I was offered an opportunity to invest into an armaments company manufacturing shells. So
really,
that is very much a sign of the times, I think. But you go back to the Second World War, and some of the huge American companies manufacturing aircraft. I mean, Grumman, for instance, the share price rocketed all throughout the Second World War, and then, of course, come the end of the war, the contracts were cancelled and the share price plummeted, and that was it. So an opportunity in every crisis. But Yeah.
Well, yeah, exactly. We remain to see what happens with all the things going on in the world. But it is good to see good projects. For example, just briefly on Great Southern Copper. I know we talked about them last week. I did interview Sam Garrett, got those questions in this week, so that's already gone out. They raised
Yeah.
$1.5 million. So there is money there for the compelling project. And Nosoterra also as well. Nosoterra raising $500,000 as well, backed again by existing shareholders. Unfortunately, it seemed like it was leaked because the share price did start to suffer quite a bit, 20% down before that was actually announced. But sometimes you can't hold these things internally. But money can still be raised just about. So that's good, and valuation's still pretty on the floor. But anyway, let's talk about some stocks. We're going to feature today Marula Mining. Of course, they signed a pretty significant agreement there for the offtake of manganese. So, Alan, just tell us, bring us up to speed on Marula. Then we've got a bit of a clip from my interview with Jason this week.
Good. Okay. Yeah. Well, Marula, of course, we've spoken on several occasions before. Mark, listed on the Aquis market, EPIC code MARU, also the A2X, the South African exchange. The shares are traded so far this year at a high of 13.75p, a low of 3.6p, but we're up now to 4.12p. But it still gives the company a very modest market capitalization of just 11 million. And I'm going to read through and just summarize each of the projects the company is operating, and then just go through the latest news developments, because it's been a very strong start to the year for the company. So the company has assets in South Africa, Tanzania, Kenya, and Zambia, although it no longer has interest in Zambia. The Nakomba Hill project that was relinquished in December 2024. So in South Africa, the primary asset there is the Blesberg lithium and tantalum mine, and that is also along with the Corridor Lithium project and the Northern Cape Lithium and Tungsten project. And the company recently acquired prospective territory that basically links the land between the Blesberg mine and the Northern Cape Lithium and Tungsten project, which gives the company a huge amount of acreage, somewhere in the region of 23,000 hectares. So a considerable amount of acreage to develop the assets and bring them to fruition. In Tanzania, the company has the Kanusi copper mine. It has a 75% stake in that asset. Has a couple of graphite projects there as well, including the Bagamoyo graphite project. And then in Kenya, of course, the company has the Larisoso manganese mine and also the Kilifi manganese plant, where it owns an 80% stake. And that's really where the excitement is focused at the moment, because, of course, the company has just signed an offtake agreement, which I'll go into details on shortly. There's a strategic partnership, of course, with Q Global. That's Quinton Vanderberg and his investment vehicle. Of course, Mark, you've interviewed Quinton on a number of occasions, and Quinton's invested many millions of dollars into these assets, and they're very focused on building Marula up into an African commodity company with assets producing commodities up and down the length of the continent. So onto this year, some significant developments in the company is becoming firmly established in Kenya, and in fact, in December, it signed a memorandum of understanding with the Mining Engineers Society of Kenya, or MESC, as it's the acronym is, to advance the mining sector in the country, and also professional development and community integration, along with sustainable practices. So, very much stamping its authority in the country there. And then in January in South Africa, I mentioned the company had signed new prospecting rights at zero cost over an acreage on the eastern, western, and southern borders of the Blesberg Permit Zone. This is the Blesberg lithium project, and this is contiguous to the southern area of the Northern Cape Lithium and Tungsten project, which combined with Blesberg now gives the company 23,000 hectares of territory to explore, and of course they have the works and the assets at the Blesberg mine, which they'll be testing shortly to bring into production. And then in February, the focus moved to the Kanusi copper asset in Tanzania. The company reported some high-grade copper assays from the project. A number were reported during February, and then later on, the high-grade assays across about 6 readings came back with an average of 19.72% copper, which is pretty significant. Also here, a sales agreement was completed, which will be completed by March the 7th, was agreed for an initial 250 tons of a planned 1,000 tons of high-grade copper concentrate, and this will be sold to 5 European commodity groups, and that's due for completion. In fact, I think it's tomorrow, isn't it? So that by the 7th of March. So I think we can expect an announcement to say that's been done. Of course, that will provide further drivers for the share price, given where it is currently. And then we come on to the manganese asset in Kenya. And during February, the company announced that modifications were underway at the manganese plant. They had hired a company called ZES Engineering to oversee the optimization of the plant and also the initial commissioning process, which is expected to be to complete by Q1 or the end of this month. It also, during that month, completed a final payment of 625,000 sterling in shares to Northern Cape Lithium and Tungsten asset in South Africa. That was placed at 6p, and the company also completed a site visit there, which was completed by both Jason Brewer, the CEO, and Richard Loy, the chairman. I know Richard well, and Richard said that there was a considerable amount of high-grade tungsten noted across the historical workings and surface stockpiles. And then, of course, in March, the developments continue with the Kilifi asset in Kenya, and a purchase, sale, and contract was agreed, brokered by Marula Mining from the Kilifi manganese plant with Biosteel Resources South Africa. Now, this is part of the Chinese giant Baowu, which is one of the largest companies in the world. It's an agreement for 5 years, and the agreement is to ship an initial 5,000 tons of manganese ore, and that ore is between 35 to 40% manganese by April 30th. And then from then on, it's 10,000 tons per month of ore from May this 2025, and that's for a full year. But as the contract continues, in April 2026, they will up the monthly tonnage to 15,000 tons, and then from May 2026 up to 20,000 tons per month. So this is a hugely significant and game-changing contract for the company to win, which is what surprises me is that there's been a very muted reaction in the share price, because historically with Marula, when these contracts have been signed, I mean, particularly last year, it just provided real drivers for the share price. But I'm sure at some stage, once the money starts to roll in from this, we're going to see a sea change in the valuation of the company, and those earnings will be better reflected in the share price going forward.
Yeah, potentially. I mean, it could be that the market just wants to see the checks rolling in, but now they've got effectively 2 agreements signed, haven't they, which will bring the money in, yeah. And the first one being very, very soon. So, I mean, I just want to play a bit of a clip, about 3.5 minutes from interview today that really, the other day, this week, I should say, that really sums up the crux of the deal and what it means to Marula.
Yeah, pretty chuffed. I'll be short. No, it's a great deal to have got done. It shows the sort of people that we're dealing with. We've always been looking to partner with some of the best in the world. And from a steel and an iron ore perspective, you don't get much bigger than these guys.
So, I mean, are you ready to deliver the required tonnage and indeed the required grades?
Yeah, look, we've been negotiating on the specs for this material for quite some time now. And, the plant at Khalifi is currently being, there's optimization work going there. There's modifications to that plant, which we said just a few weeks ago. That work is ongoing. I'll be up there later this week to have a look along with Edu Raheni as our General Manager Operations for East Africa. Yes, we'll be ready to deliver those initial 5,000 tons in April, and thereafter 10,000 a month for the next 12 months, and then rising to the 20,000 tons. So we're very confident in that plant. We're very confident in the region as it has some tremendous manganese resources.
Of course, it starts off at this 5,000 tons per month, but scaling to 20,000 tons per month within, it's just about a year's time, or just over a year's time there. I think that's going to require pretty flawless execution. I mean, any delays on the plant commissioning or operations with mining there could indeed risk jeopardizing this contract. So, I mean, how are you feeling about the ramp up? I know we're just getting started here, but we've got to be thinking long term.
Absolutely. Look, we've got work taking place now. We announced just a couple of weeks ago a local Kenyan-based group that's assisting us with the modifications, with the optimization of that plant. To achieve 10,000 a month is a single shift over that full month. So we're very confident in being able to deliver that. Doing 20,000 tons per month, again, is a conservative basis, and that requires a twin shift. Again, we can operate this effectively 24/7. It's a very simple, straightforward processing plant. Which is taking receipt of manganese ore at the process plant gate. So we're very comfortable with the procedures, with the planning, with the preparations that the team's put in place. But now it is execution, and we've got to be in a position over the course of April to be delivering that product to Mombasa. The great advantage of this project, Mark, is its logistics. We're just 60 k's from Mombasa Port. There's very few other manganese projects around the world that are this close to an established port. And a port which has such significant advantages, compared to South African ports for the delivery of manganese to the Middle East and to the Asian markets. So, I think we're very well placed to deliver on these tonnages and the ramp up over the course of the next 12 months. At the moment, our manganese is probably worth in the range per ton of ore of between $130 to $165 per ton. Okay. We've put out numbers previously, Mark, as you've seen, in terms of our costings. The costings to get it to port, the costings to process it, to purchase the ore where we're purchasing it from third parties. So it's a very robust project. It's a very simple processing plant. There's no reagents, there's no chemicals. It's a very simple beneficiation, crush, screen, wash through the trommels, through the screens to give us a final product. Which we're targeting of between 35 to 40%. So at those margins that we're anticipating, this is a very good earner for the Marula Group.
So are we talking there potentially $750,000 per month if it's 5,000 tons?
Yeah.
Jason
Brewer sounding as confident as ever, isn't he there?
Yeah. I mean, the numbers are fantastic, aren't they? That's, $750,000 for 5,000 a month.
And sort of free cash flow. Yeah, exactly.
Clicks, 60 clicks from Mombasa Port, which is logistically, that's fantastic, because Africa's such a vast place. Just 60 k's, that's about 40 miles, and it's probably a fairly straight road as well. So, but that's really exciting. I mean, that's a real game changer, because you start bringing that sort of money into the company, you're not going to be at 11 million market cap for long.
Yeah, exactly. And I mean, it's all going to start pretty soon. As you said, we've got Canusi copper very soon, and the manganese now going through, in the next, it's month or two, effectively. So, well, let's see the goods, Jason. That's what I say. Let's see those trucks taking it away. But I mean, as I say, he's coming across very confident. Doing that, it's been all announced formally, so it's just a matter of time until we start to see those shipments going, I think, and indeed the money flowing in. Dan, do you have any thoughts on Marula?
Yeah, it's interesting that he mentions the price as well. I was reading a note from Fast Markets earlier that said, although manganese prices have been a bit soft of late, the growing use of LMFP batteries in EVs is expected to see prices increase significantly from here into the 2030s because manganese, is a core component in these batteries. So I guess that really stands to add some additional value to that particular income stream that's been announced this week.
Yeah, indeed.
I think also it's the the obviously Khalifi is front and center at the moment with this deal, but as as I covered, you've got the Canusi copper project, the sales there of copper concentrate going through, and then Richard Lloyd's comments on Blesberg, the tailings there, the amount of tungsten in the tailings or in the old mine and also in the tailings too. So this could really explode into life this year. There are so many. I think when you've got a company like this that's got so much just about to happen, it's in a good place. And I think it's set for a great 2025.
Yeah, I agree. Okay, well, thank you, guys. That covers our feature piece there, Marula. So let's move on and talk. Dan, you want to talk to us about Altona Rare Earths?
Yes, thanks, Mark. So today I want to look at REE. It's recently come onto my radar. It currently has a market valuation of just over £2 million, and it's been trading pretty stably this year, albeit with limited volume. But I think there's some interesting catalysts upcoming that stand to spur some buying. So Altona's flagship project is called Monte Moambe. It's based in Mozambique, and it contains a massive rare earths deposit. So Altona has so far drilled over, nearly 8,000 meters to define a huge maiden JORC estimate of 13.6 million tons at 2.4% total rare earths oxide. And impressively, almost 60% of that's in the indicated category. Alongside this, Altona has also completed a scoping study for the project, and it's now at the pre-feasibility stage, with the focus being on metallurgical testing for rare earths extraction. So this represents a massive potential future operation, and Altona's goal at the moment is to secure a strategic investor to help take the project forward. But obviously this takes time, and this isn't helped by the fact that rare earth prices are a little soft right now. So rather than sit on its hands, as these efforts to advance and ultimately commercialize Monte Moambe's rare earths resource have continued, Altona's done the logical thing over the past year and diversified away from rare earths alone. And this is where I think the company could really start to generate some shareholder value over the short to medium term. There's two main parts as I see it. So first, independent of its rare earths potential, Monte Moambe presents huge production potential for a raw material called fluorspar. So fluorspar isn't well known. I hadn't actually heard of it prior to researching Altona, but demand and prices have been steadily increasing over recent years due to its use in EV batteries, along with its application in the chemical and metallurgical industries. So the western area of Monte Moambe contains a number of high-grade fluorspar veins. So these are independent of that rare earth deposit I mentioned just now. And assay results earlier this month indicate that the fluorspar grades from these veins average 88%. So this exceeded management's expectations and the typical range for metallurgical grade production. And really, this is where things could get very interesting for Altona. So the company is currently completing a scoping study for a fluorspar mine producing from these veins. And because this will take the form of a simple bulk mining and crushing operation, management believe it could be brought into production both cheaply and quickly. So there's no need for years of subsequent enormously expensive, definitive feasibility studies and construction, etc. Once the scoping study is done and some metallurgical work has been completed to optimize production, Altona believes it could be producing fluorspar from Monte Moambe within 12 months of making an investment decision. Frankly, it's pretty exciting for an explorer and development company to even stand a chance of generating near-term revenue, especially when it has a market cap of just $2 million. But when you also consider the cash it generates from the sales of this fluorspar could be invested back into the rare earths opportunity, the stock's valuation seems all the more disconnected from its underlying assets. So as Altona waits for rare earths prices to stabilize, it can advance its long-term opportunity with that big deposit and make it more attractive to potential development partners without relying solely on dilutional sources of funding, because it'll be funding it itself with its revenues. And that's valuable in a market like this. So the way I see it, the release of the scoping study for Monte Moenbe's fluorspar mine will be a watershed moment for Altona. It will set in motion a series of subsequent developments capable of generating significant long-term value. And the good thing is the results of that scoping study are due at the end of the current quarter, so in the next few weeks. So I think we could see the stock gain some traction very soon.
Yeah, I mean, I agree. I mean, I've always liked Altona rare earths, and the rare earth element was why I was interested in it. And of course, they have come a bit soft, as you say. But I had a really good sit down with Cedric towards the end of last year, and the fluorspar element is what he has history in anyway. I think he sort of cut his teeth, let's say, in fluorspar mining. So he sees that basically, as you said, a sort of a low-hanging fruit, quick way to sort of decent cash flow, whilst effectively keeping the rare earth element still sort of ticking over there with the metallurgy, and also just perhaps biding time, waiting for rare earth prices, but also looking for strategic partners. So I think what he's doing is perfect. You don't want to just sit around and do nothing. I know they've got their copper projects as well in Botswana, and they haven't really done much with them, I don't think, yet. That's
I
something
was going to say that's another important part of the company's diversification away from rare earths. So they've got a project called Sasana that looks particularly attractive to me. So that's based in Botswana's Kalahari Copper Belt, or the KCB, which is
KCB.
Hotbed.
Not far from the Sandfire project either, I believe.
Yeah, that's right. So it's got a 10-kilometer stretch of this contact between two geological formations called Dakar Naguaco Pan contacts. And that's where copper deposits tend to form in the KCB. And so Sasana's just 25 kilometers away from MMG's massive Khoemacau Zone 5 copper silver mine. MMG is looking for ways to increase production, which obviously could include purchasing licenses with mineral potential. So as Sasana, Altona is preparing geological surveys to identify the highest priority targets for drilling. I would say it needs to get this right, because drilling in the KCB is expensive because of the sand cover that needs to be penetrated. But if it is successful and it makes a significant copper discovery, then personally, it seems like the project would be a pretty obvious takeout opportunity for MMG if it just wants to add some more reserves that it can produce at its own production facilities at Zone 5. So that's another area of the business, alongside Monte Moenbe's fluorspar opportunity, that I think is worth keeping an eye on over the coming weeks and months.
Yeah, indeed. No, I agree, Dan. I'm looking forward to seeing, following that and seeing how Cedric indeed takes that project forward. Alan, do you have any comments before we talk about ECR?
Well, I think as we said, I think it's the fluorspar is the really exciting X factor in all this. And I know fluorspar is the popularity and the use of fluorspar over the years have ebbed and flowed. And some years ago, we worked with Tertiary Minerals when they had fluorspar projects in Sweden, and those projects were basically mothballed. But I suspect given the new focus and its significance in the forming sort of part of the EV production process, I think there could be a resurgence in that. But again, you've got an asset there, because I think originally the fluorspar asset there was the Sagem. Well, it was operated by a French company, Sagem, if I recall correctly. So there were fluorspar operations there previously, or exploration there previously, but then the focus moved to rare earths. But I think now it's it's a multi-asset company, isn't it? Altona. It's evolved from rare earths into a fluorspar company, and also one with copper assets too. So
indeed,
exciting times.
Indeed. Well, ECR then, Alan, of course, gold, and they've announced some. Well, they had quite a bit of news, haven't they? About three bits of news. Some people will be disappointed with the tax losses, I know, but I think it gives them optionality, and then they've sold some land. But yeah, bring us up to speed.
It does. It's been a busy year by any standards, and of course, we've seen a lot of social media from ECR, where Nick Tulloch, the chairman's been flying all over the place, and site visits recently where he was reporting from the Blue Mountain project. But the company has an exciting portfolio of assets. I'm going to focus on Australia first, then we'll have a quick look at the Canadian assets. The share price is currently just off year lows, really. We, of course, the news of the acquisition wasn't that well received, but I don't think people have fully considered the opportunity in Canada, which I'm hoping to address in some way shortly. But we're at 0.22p now, have been as high as 0.47p. And of course, let's not forget, a couple of months ago, the company raised £950,000 at 0.33 of a pence. So there's a very firm floor in terms of valuation there. And that was at that juncture, of course, before the developments crystallized with the tax losses and the sale of the land in the Creswick area. So there's I think in terms of valuation, it represents a really strong opportunity right now. But the tax losses, of course, have been the primary focus. Now, initially, the company had an agreement, or it entered into an NDA with Octo Holdings, and Octo valued tax losses, which were thought to be as high as $75 million. It valued those tax losses at 4.5 million Australian. And the transaction was due to complete in February, didn't complete, of course, and then we had the announcement that the company had decided on the basis, two primary factors. Firstly, it was receiving throughout expressions of interest in the tax loss package as it was, and then the company also looked at what it was doing and took some advice and realized that where the Blue Mountain asset is moving towards production. I mean, we have an asset there that is ready to produce alluvial gold, and of course, it's a question of costing out the infrastructure that they'll need to put in place there. But instead of just selling the losses for cash at 4.5 million Australian, they can actually generate a total potential saving of nearly 19 million Australian dollars if those tax losses go into the operations at Blue Mountain. So that could be hugely significant as the company starts to produce. And of course, it won't have to pay really any tax on that production. So an important consideration there. And then, of course, we have the other assets too. We have the Lulworth asset, where the company's reported some significant gold readings. And Lulworth is a huge area in Queensland. It covers this vast territory. Some of it is fairly inaccessible, but it's dotted with historical gold mines, dotted with old workings. I mean, if you, as Adam Jones, the geologist, has traversed the terrain, you've found old crushing. Old crushing machinery. You found old mines, shacks which have been abandoned, from which used to house some of the miners that used to work there. So it's an area that's really fertile with assets and fertile with mineralogy. And of course, there is a joint venture there with the Geological Society of Queensland to conduct the exploration. So the operations there are very high profile, and I know Adam and the team have plans to restart the operations there in the not too distant future. So we have Lulworth, obviously, Blue Mountain I've mentioned. That's those steps are continuing rapidly, and also part of the sale process would have included the Bayliston asset, and Bayliston itself has undergone considerable amounts of drilling work over the years. So you've had a number of prospects there, the Cherry Tree project, Byron, HR3, and others. But it's the proliferation of antimony that has really captured the imagination. Of course, antimony prices are rising rapidly. It's an important mineral, and the grades that the company secured from the drilling included 0.3 meters at 32% antimony. So antimony is present in commercial amounts. So of course, not taking the offer up from Octo means that is now back in the bank as well. And there's that really adds, in my opinion, significant value to the ECR investment proposition. So that's going to progress. And of course, we've had drilling that's taken place in Tambo through the year. The company's fully funded. The most recent announcement, of course, the company received 225,000 Australian dollars into the account. That's to add to the 950 raised in December. So the company is cashed up at present. So it had the opportunity to say no to that 4.5 million Australian dollars if it saw a better strategic use. And Nick and Mike have articulated that, I think, very well indeed. So we then come to the latest acquisition, which of course is a move away, really for the first time in ECR's history. It's moving away from Australia to focus on an opportunity in Canada through the acquisition of Maximus Minerals, which is a private limited company, owns 3 base metal projects in Ontario, all of which have copper and zinc showings. So the acquisition is for $500,000. That will take place. It's a share-based acquisition, and those shares will be issued at 0.33 pence, which is also the same level at which the cash was raised last year. So again, the value, the recognition of value in the company was struck at that level. So that's again highly significant for anyone considering investing into ECR where it is now, which is 0.22 of a p. So well below there. So the primary asset there is the Cat Key project, which is located 280 kilometres west of Thunder Bay in Ontario. And of course, we've heard about a lot of about the operations there, both through Panther Metals, through Fulcrum, and also through First Class Metals. It's a hugely fertile area. But some of the drilling that's taken place there already has returned significant numbers. There's an area called the Bush Rat Zone, some wonderful names there, 525 grams per ton gold over 0.5 meter, and similar readings elsewhere. So there seems to be a real opportunity here, a near-term opportunity to commercialize this asset and possibly even declare a JORC resource for the area. So I think the package that ECR now offers is stronger than ever. It has an opportunity to utilize the tax losses in another way. It may go down offsetting those tax losses against the Blue Mountain asset, or it may even get a better offer from some of the other companies that entered the data room to discuss alongside Octo Holdings. Either way, there's everything to play for. The asset's there to sell or utilize as management see fit, and I see a great opportunity for the company going forward. So investors looking at it at 0.22p, I think, have a great value opportunity to invest into.
Well, thank you, Alan, for bringing us up to speed. Of course, I did speak to Nick Tulloch twice. It was on, of course, the acquisition in Australia, but also the tax losses there, which, of course, are pretty famous, been hanging around for a while. And I do understand how investors are probably disappointed that it hasn't been sort of crystallized into cash. But I'm prepared to sort of give the team, benefit of the doubt here that they've got lots of options on the table there. Particularly, I think if they can get into production at Blue Mountain, I think if I was in that position, I'd rather have a vehicle that had a lot of tax losses that I could basically offset and have a tax-free gold operation for a few years, rather than sort of get cash in. It's not that they're desperate for cash right now, So I think the next 2 to 3 months is pretty important for ECR to advance things at Bayliston, as you've said there, to see if they can indeed do something with that and shift the tax losses with that. It also gives them more time to see if they sell them on their own, as I said, if I had other interested parties, but also importantly to start getting things moving on the ground at Blue Mountain. and to see if we can actually get into some gold production there. And if I had a vote in this, I would be saying, well, if you can get into production at Blue Mountain, I would be pretty happy to keep that vehicle.
Absolutely. Yeah.
Yeah. Do you agree? Yeah. Okay. Cool.
Yeah, totally. I think it's but I think they're, through the other companies seeing the opportunity and the tax loss package, I think it may well transpire that an offer comes along that offers even better value than offsetting the tax losses against Blue Mountain. Who knows?
Yeah.
But either way, I think the benchmark you've got to consider is A, they raised the 950k at 0.33p. B, they've done the deal with Maximus Minerals at 0.33p, and we're now setting at 0.22p. So do the math.
Yeah. Well, thank you, Alan. Thank you very much. Dan, you want to finish us off quickly on Vinanz PLC?
Yeah. Just moving on to crypto quickly for
digital gold, as it's known.
Yes, that's right. We'll see how that plays out over the long term. Yeah. So Vinanz, I think it's worth covering. It's quite timely given what's happening in the crypto space right now. Just to recap quickly, Vinanz is a Bitcoin miner. However, it doesn't own its own infrastructure and incur the costs associated directly. It operates through third-party data centers in North America and Canada, but specifically areas where energy is reliable and cheap. So it's a good model for scaling up. The data centers operate miners on Vinanz's behalf for fixed fees. This keeps overheads low, and that increases the profit on whatever Vinanz mines. So recently in RNS, the company said at a Bitcoin price of $95,000, which isn't far off where we are at the moment, the operating margins on its machines in Nebraska are 30.9%, and they're 43.3% on the machines in Texas, which is pretty good by industry standards. So since moving to the main market of the LSE earlier this year, Vinanz has been rapidly expanding its fleet of miners. They now span Indiana, Iowa, Nebraska, and Texas in the USA, and Labrador in Canada. And I expect it will continue to do this with the money it raised. Now, I think the next few weeks could be quite interesting for this company. First of all, of course, there's the Bitcoin price. It's around 90K at the moment, so pretty far from its post-US election highs, as we referred to earlier. But as listeners will know, Trump is taking an aggressively pro-crypto stance right now, with the strategic reserve featuring Bitcoin. And he's promised more surprises, which will presumably be positive to come. So given how feverish buying can be in this market whenever something good happens, there's the possibility that we could see Bitcoin soar again beyond all-time highs quite quickly. It might not, of course, but if it does, then it will only improve Vinanz's operating margins and increase the value of the Bitcoin it holds. And it will also make it more attractive to investors who are hungry of new ways to get exposure to crypto beyond just buying Bitcoin alone. So that'll be interesting to watch. Alongside this, Vinanz is due to release its interim soon, which was something you briefly discussed with David Lenegas when you spoke to him this week, Mark.
Yeah.
So we know Vinanz is debt-free and has cash for expansion after moving to the LSE main market. We know its operating margins are good, and we know it has Bitcoin on the books. But I think these results will offer much more insight into its business model and its balance sheet. If the figures look good and major growth from here looks feasible, as will be the company's goal, then it seems that it's likely to get potential investors currently waiting for clarity to actually deploy some capital in the company. Again, like it's that idea that it sounds good. The model sounds great, but quite rightly, a lot of people want to see some meat on the bones and actually see some figures. So to sum up, I think next few weeks, strong financial results and a strengthening backdrop for Bitcoin could see Vinanz resume a positive trajectory as we move through the year.
Well, indeed, let's see how it goes. I mean, David Lenegas's model is pretty simple. It's just to effectively get more miners, just mine and hold Bitcoin, reinvest some of that Bitcoin into getting more miners and effectively building his own strategic reserve, or the company's own strategic reserve. So he won exposure, sort of perhaps a more de-risked exposure to Bitcoin in the UK than Vinanz is probably one to consider. And yeah, we won't be short of surprises, let's say, or excitement from all of that crypto-related things with the new US administration. Well, thank you, guys. Thank you very much for your time. Good to catch up as always. So I do wish you all a pleasant weekend, and we'll speak in a week's time.
Thanks,
Thank you, Mark. Yeah. Thanks, Dan.
Cheers.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.